China just did something really important with their money. They cut how much they're holding in something called US Treasury bonds to $700 billion. That's the smallest amount they've had since 2008. Now, let me explain what Treasury bonds are first. Imagine you have a friend who needs to borrow money. You give them $10 and they promise to pay you back later. Plus, they'll give you an extra dollar for being nice enough to lend it. That's basically what a Treasury bond is. China lends money to America, and America promises to pay them back with a little extra. For a long time, China had been lending America a lot of money. Back in 2013, they had $1.3 trillion in these bonds, but now it's down to $700 billion. That's almost half gone. Everyone thinks China is doing this to be mean to America. Like when you're mad at your friend, so you don't share your toys anymore. But that's not really what's happening. Here's the truth. China is stuck. Think of it like this. Imagine you have a huge piggy bank full of special coins. But if you try to break the piggy bank and take out all the coins at once, the coins will become worth less. So even though it's your money, you can't just grab it all without losing some of it. That's what's happening to China. If they try to sell all their bonds too fast, those bonds become worth less money, and China loses a lot of their own savings. Let me show you the real numbers in simple terms. China has $3.3 trillion saved up in total. Those treasury bonds worth $700 billion, that's only about 1/5 of everything they have. Back in 2013, it was more like 1/3. So they have been slowly moving their money around. But here's something sneaky that most people don't know. While China sold $600 billion worth of these treasury bonds since 2013, they actually bought over $800 billion worth of other American stuff, like company bonds and stocks. So they didn't really leave. They just moved to a different room in the same house. Now, China has done something like this before. Back in 2015 and 2016, China lost $1 trillion trying to keep their own money strong. $500 billion in 2015, another $450 billion in 2016. Chinese people and companies were moving money out of China. China's money was getting weaker, so the government had to sell lots of their savings to fix it. And you know what happened? Markets got shaky for a little bit, but America was able to handle it. No big disaster, everything went back to normal. That's the lesson. Selling slowly works fine. Selling everything super fast hurts the person selling more than anyone else. So what would happen if China tried to speed this up? Let's imagine. Say China starts selling $100 billion in bonds every single month. Suddenly, the price of these bonds crashes. When bond prices go down, something called interest rates goes up. Think of it like this. If fewer people want to buy something, the seller has to make it cheaper or offer better deals to get people to buy it. So America would have to promise to pay more money back to get people to lend to them. That means America has to spend way more money just paying back loans. The government's bills, already $1.8 trillion every year, would suddenly jump by $500 billion just for paying interest. When that happens, other things get more expensive too. Like if you want to buy a house, the loan to buy that house becomes more expensive. If companies want to borrow money to grow their business, that costs more too. So everyone stops buying houses, and companies stop growing. The economy slows down. Banks that hold $4.3 trillion in these bonds would see them lose value. Imagine you have 100 toy cars, but suddenly they're only worth 85 toy cars. Banks would lose $645 billion worth of value. They'd have less money to lend to people and businesses. Companies need to borrow money to keep running. In 2026, companies need to borrow $1.2 trillion. But if borrowing costs way more, they can't afford it. So some companies would go broke. But it doesn't stop there. The Federal Reserve, that's like America's main bank, would panic and step in. They'd buy $500 billion worth of bonds in just 2 weeks to try to fix things. They'd print more money to do this, going from $7.2 trillion to $7.7 trillion. But when markets see that, they think America is desperate. So people worry more. Prices of things go up. The dollar becomes worth less compared to other countries' money. Other countries' economies that depend on dollars start having problems too. Everyone panics. The dollar drops 15%. Markets crash. Other countries start selling their American bonds too. Nobody wants to lend to America anymore. Interest rates spiral up even higher. Recession, that means the economy shrinks instead of grows. That's the nightmare everyone worries about. If you're starting to see how this whole system really works, and you don't want to miss what happens next, hit that subscribe button right now. I'm breaking down these financial traps that nobody else is talking about. New videos every week showing you exactly how to protect yourself. Click subscribe and turn on notifications so you don't miss the next one. But here's the reality. The moment China does this, China hurts itself even worse. Remember I said China bought $800 billion worth of other American stuff? When those treasury bonds crash, all that other stuff crashes too. Let me do the math for you. $1.4 trillion in other American assets. If those lose 10% of their value, that's $140 billion gone. Plus the treasury bond losses of $105 billion. Total loss right away, $245 billion. That's over 7% of all of China's savings gone instantly. And it gets even worse for China. China sells stuff to America. Americans bought $427 billion worth of Chinese products in 2024. If China causes America to have a recession, Americans buy 25% less stuff. That's $107 billion in lost sales every single year. China's economy stops growing as fast. People lose jobs. People get unhappy with their government. Plus, when China starts selling fast, other countries freak out. Japan has $1.2 trillion in these bonds. Saudi Arabia has $136 billion. The UK has $865 billion. If everyone starts selling at the same time, the whole thing collapses. And China can't survive that. The math just doesn't work. China has $5.8 trillion worth of stuff tied to American dollars across everything they own. Savings, banks, companies. If the dollar drops 20%, China loses $1.2 trillion in value. China's banks only have $1.8 trillion extra saved up for emergencies. Losing $1.2 trillion takes away 64% of that safety cushion. Their banks could be in serious trouble. So China can't dump everything without destroying themselves. America can't survive China dumping everything without a recession. Both are stuck because it's just too big. Both would lose if either one makes a big move. But they're not just sitting around doing nothing. Watch what's actually happening. China has been selling slowly, about $4 billion per month on average, since 2013. At the same time, they've been buying gold. China, Russia, and India together went from 3,423 tons of gold in 2015 to 5,260 tons in 2024. A ton is really heavy, about the weight of a small car. China alone has 2,260 tons now. They're also talking to other countries about setting up ways to trade without using dollars. But here's the problem. It's going way too slow. At the speed they're going, China needs 162 more months to completely get out of these bonds. That's almost 14 years. And the crisis is getting faster than their exit plan. America's deficit, that's how much more they spend than they earn, hit $1.8 trillion in 2025. The government needs to borrow $2.2 trillion every year, but other countries are buying way less. Countries bought $147 billion worth in May 2025, but only $25 billion in September. That's an 82% drop in just 4 months. So China probably has 12 to 24 months before they have to make a big choice. And it's not just China that's stuck. America needs other countries to buy that $2.2 trillion in bonds every year. Without them, interest rates go way up, and borrowing becomes super expensive. Japan can't get out either. They'd crash their own savings. Everyone's trapped. And here's the funny part. For 20 years, this worked great for both sides. China built up huge savings, sold tons of products to America, made 800 million people's lives way better, became the world's second biggest economy. Meanwhile, America borrowed money really cheaply. The average interest they paid from 2000 to 2020 was just 3.2%. Without other countries buying, it would have been 5.8%. America saved $420 billion every year, just on interest. The good thing created the trap. The more China lent, the more stuck both became. Now those benefits turned into problems. China's savings are stuck. America's borrowing depends on other countries wanting to lend, but they're buying less. Both locked in a situation where neither can make a big move without both getting hurt. So what happens next? 3 possible things over the next 2 years. First possibility, everything stays calm. 20% chance this happens. China keeps selling slowly at $4 billion a month. Markets handle it fine. Other currencies slowly become more popular over 10 to 15 years. No big shock. Both sides manage it okay. Second possibility, bumpy but manageable. 60% chance this happens. China sometimes sells faster. Markets get shaky every few months. Interest rates bounce between 4% and 6%. Markets get scared every 6 to 9 months. The Fed steps in sometimes to calm things down. Some companies struggle, but no total disaster. Just a bumpier ride than normal. Third possibility, everything crashes together. 20% chance this happens. Big countries all decide to sell at once. China, Saudi Arabia, UAE, others all act together. $300 billion sold every month. Interest rates jump to 8%. Dollar crashes 25%. Worldwide recession. Nobody can borrow money. Banks have serious problems. The Fed tries to fix it but can't. Total financial chaos. Complete change of how the world's money system works. Most likely, the second one. Because countries acting together requires them to trust each other and plan perfectly, which is really hard. Everyone wants different things. Timing doesn't line up. It's too complicated. And markets have shown they can handle slow pressure pretty well. So what does this mean for regular people? If the second or third thing happens, dollars become worth less. Your savings buy less stuff. If the dollar drops 15%, your $100,000 only buys $85,000 worth of stuff from other countries. American stocks get hit by all the ups and downs and maybe a recession. When interest rates go up, stock prices usually go down 12 to 18%. Houses become harder to buy because home loans cost way more, over 9%. That makes it 28% harder to afford a home. Fewer people buy houses. Prices could drop 15 to 20%. So how do you protect yourself? First, gold. Gold usually stays valuable when everything else is crashing. In 2008, gold went up 5.5%, while stocks fell 38.5%. In 2020, gold gained 24.6% during the March crash. In the 1970s, when prices were going up a lot, gold went from $35 an ounce to $850. Governments are still buying gold. Big countries added 1,837 tons from 2015 to 2024. Try to have 8 to 12% of your savings in gold. Second, money from other countries. Swiss francs and Japanese yen. These usually become worth more when the dollar is having trouble. In 2008, the Swiss franc gained 12% versus the dollar. The yen gets stronger when people are scared. Consider having 15 to 20% of your savings in these. Third, property in stable countries. Germany, Singapore. These places have steady rules. German property makes 3.2% per year, with 1.8% growth in value. Singapore property only moves 34% as much as American markets. Low connection means it protects you better. Worth thinking about if you have more than $2 million saved. The big thing to avoid? Keeping everything in dollars. Having all your money in one currency makes you take the most risk right now. Don't wait for the crisis to start before moving some money around. By then, everything costs 15 to 25% more to change. The time to move some savings around is in the next 12 months while everything is still calm. Look, this isn't about picking sides. It's about understanding how it works. This isn't China fighting America. It's a trap both built together over 20 years. And now they're both trying to get out without making everything explode. The crisis isn't coming later. It's already here, just happening really slowly. China sold $281 billion in these bonds over the past 3 years. They're speeding up. Over the next 2 years, the time to do something runs out. If this video opened your eyes to what's really happening with the dollar, if you now understand why your savings might be at risk, then you need to stay ahead of this. Subscribe to this channel right now, because I'm tracking every move China makes, every shift in the markets, and I'll show you exactly when to act. Next video drops in 3 days, and I'm revealing the 3 specific moves you need to make before this crisis speeds up. Don't wait until it's too late. Hit subscribe, smash that notification bell, and I'll see you in the next one where we talk about protecting your money before the window closes.